Hi guys, my name is Girish, the host for Back2Basics, another Back2Basics to another Back2Basics. Does that make sense? I hope so. Well, anyway, so today we're going to talk to you about business and marketing. What is business and marketing? Why do we need that? What are the trends for it? What do we need to do to get to the highest level of business and make money, your best income that you can ever have? We always dream for that, but always the answer that what we get is we don't have enough money, or we don't have enough funds, or we don't have enough investors. So we will get into that business and we will get into that episode today with Krishna Mohan today. Krishna, how are you? And thank you for coming back to basics.
Yeah, I'm doing great. I'm definitely excited to be part of this interesting conversation that you just brought up.
Yeah.
Glad to be here. Thank you for the opportunity.
No, anytime. So before we get into the basics of this whole episode today, what does back to basic mean to you?
Well, back to basic, from my perspective, is Girish, that keeping it simple, going to ground zero. Since we're talking about business and marketing, getting back to the ground zero in terms of why are we into this in the first place? What are the things that we are supposed to do, but we ignore to do, and then look for something big and chase other things. And those are the things which I think which resonate with me as going back to basics.
Oh, thank you so much, Krishna, for that. So before we get into that, can you explain to the audience of who are you and why are you and what this company is all about? What you have started this empire, I should say.
Yeah. So I come from a corporate background. I have extensive sales, marketing, business development experience. I helped 3 Fortune 500 companies for over 9 years, and then I helped several startups in various industries like telecom, IT, data center, consumer durables, lighting, and so on and so forth. And I got my basics right. So that means I went to school. I got my master's in marketing management. I have an MBA in international business. I also have a MS in finance. So I make sure that I got those things right while I'm implementing those things that I learned in my business, and learned a lot of things along the way. And then at some point, I realized that I should start something on my own to combine everything that I learned in the industry versus academic. And then I thought I have a list of challenges that I observed in the market, and I also observed that there are no concrete solutions to those problems. What if I come up with those solutions and create a business out of it, and then I become the solution provider? And that's how Genius Visionary started, with the vision to solve the challenges for large enterprises, at the same time help small business owners, the startups and the mom and pop shops and growth mode companies, and came up with different solutions for different companies and entrepreneurs at different levels. So we have management consulting as one division. We have M&A advisory as one division. We have M&A consulting as one division. We also do business coaching for smaller business owners. We help small business owners on revenue growth, take them from point A to point B, and then we take that as a 1-year engagement and help them along the way. And then going back to basics, which is helping them in funding and financing, which means we help them to build business credit based on EIN and separate the business owner using their personal FICO and collateral to raise capital. So we have put structures and systems and processes in place, so there is some kind of predictability for somebody who is working with us in the outcomes. I think that's who we are.
Yeah. Thank you, Krishna, for that synopsis of that. So let me ask you something basic, if you don't mind. So a person who has a Social Security, who's starting let's say buying a car, we need a great credit score for that, right? So for a business, if I want to start a business, there's no credit score, there's no nothing, and I'm starting from scratch. So what do I need to do for the business aspect of that?
So here is the deal, Girish. As a person, we have FICO scores. Whether we have it or not, we need to have FICO scores, and that's how the banking system would look at us, underwrite us on any application, right? But as a business, they have something called Paydex Score. So the Paydex Score is 0, like in the case that you explained, a new startup, right? So it's the job of that the founder to build the Paydex Score. He need to work on building the Paydex Score, and there are multiple steps towards it. There are several steps. In a simplistic language, it takes about 6 to 8 months for any business, whether it is established or a startup, to build that business score, Paydex Score, and then separate that individual using his personal FICO and his personal collateral to raise capital for business. If he does anything before that, he has to use his scores, he has to use his collateral. Those financial institutions may not be telling him, but they're underwriting him based on those credentials. He still will get his car, he still will get his MX credit card, he still can go and get his line of credit, but he's on the hook. The business is always risky, anything could happen, and it's almost impossible to succeed in business without failing.
And when you say on hook, you're talking about the interest rate is going to be high?
No, that's fine. That is one part of the puzzle.
One part of the puzzle.
Yeah. We can get 0% like credit cards and things like that.
Okay.
Unsecured.
Okay.
But what I mean by hook is, let's say you start a business today, and you have this idea, some business idea,
Sure.
and then you think that you're going to crush it. And you have, your own planning, and you took, take care of all your expenses for the next several months, and then you think that you're going to break even 6 months or 1 year down the line. And then you start your activities, and suddenly things will not go as you planned, and something happens, and then you probably go negative in whatever you're doing, and then you raise this credit card debts or whatever debts you raised. What happens is they are going to come after you as a person. When I mean you as a person, is they will get to your home.
Yeah.
They will go after your car.
Yeah.
So when that happens, what happens is that you will affect your FICO scores. Okay. So what it actually means is that you're risking your kids' education. You're risking your ability to get a best deal for your car. You're risking your ability to buy your next home. You get the point, right?
So I get the point, but
because of the business, what I'm trying to say is, if something goes wrong, which we are seeing on a daily basis,
Sure.
Most people who have issues with the credit or have some kind of experiences all the way up to bankruptcies.
But the
majority of the cases, it's attributed to the mistakes they made in business, not because of their personal habits.
So here's a question: the Social Security and the tax ID, they're two different things. But you're
Yes.
telling me the way you're exampling is that they're linked together somehow.
That's the way the underwriters link it.
That's how.
They're not telling you.
Yeah.
They're not telling me.
Okay, got you.
So we studied. What I'm trying to say is, okay, we studied all the underwriters, the way they underwrite in the commercial banking world. Be your line of credit, be your whatever financing, your real estate deal, your rehab deal. Maybe you're raising capital to run your payroll. Maybe you're trying to raise capital to buy your office building, or buying that equipment or some technology.
Yes.
No matter what, they have their own underwriting guidelines. You may change banks, but each bank may have different underwriting guidelines.
That's right.
So my analysis is coming from understanding how they look at these things.
Understood.
So we are educating a common businessman to be aware, but there is a better way. The better way is to be proactive and build that business credit to your business while you're building the business.
Yeah.
People don't start businesses with an expectation to, to work on everything. They're more focused on revenues. They're more focused on numbers. So if I make $100,000 this month, I'm good. That's the psychology of these business people. What they're not thinking is, with this idea, 1 or 2 years down the line, I may have to raise $500,000. Where is the money going to come from? Yes, if my top line grows, I can reinvest. What if your top line doesn't grow? Which is most common scenario.
Yeah.
What if that 2 years is 4 years? What if your entire business model is wrong? So what I'm trying to say is, along with that, if you start building your financial foundation for the business in the right way, the way the big boys play the game, you have the eligibilities like all the bigger players. You may get 100,000 line of credit. You may get $500,000 for credit cards. You may get another $500,000 for some other financing. You may get fleet financing. You may get merchant finance. You have all these eligibilities that will empower you while you focus on your top lines.
Yeah.
But you got to do it in the right way. There is a right way. And that right way is the one which will allow them to actually buy time to work on their ideas. I have this brilliant idea, but I don't have time to give 2 years. This is a typical entrepreneur's problem. What if you can give 3 years time? You will execute it in a phenomenal way, but where will the time come from?
Before we go to
yeah, go ahead.
And before we go to the next point, is there a way that we can request from banks the underlining document, or that's something, or is that something hidden?
I don't think they're going to reveal it, because usually what happens is that banks are not in a business of educating us. To in a way, how to do business with them. But we came up with a program. We have something called Genius Business Finance Suite, which lays down the entire roadmap, like kindergarten all the way to PhD.
Yeah.
So we have a starting point. We have a finish line. The finish line is what I mentioned in the beginning, separating you as a business owner from the business. The business has the capacity to raise any capital on its own, by its own. So you have your personal credit for your personal, you have your business for your business credit. You start second venture, it has its own business credit. You're not messing up with anything this. Something goes wrong with that business, it's responsible on its own. It's not going to come after this, it's not going to come after you. That's the right way. Now, if we skip these steps, then the consequence is, you said that interest rates are high, which is obviously possible. Second thing is, as I said, you may not get better terms. Just to give one simple example, if you as a person is entitled, let's say $10,000 for a credit card or any kind of line of credit. If you have business credit, you're eligible for 10 to 100 times of your personal eligibilities. Just to give you an idea what's possible if you position yourself as a business.
Yeah.
So if these simple things can change the game of almost every startup, if they just understand it, because that's the money that we're struggling for. People are pitching their deals to investors all day long to raise that $100,000. People are pitching their deals. People are actually selling their 30-40% equity just for $50,000. I've seen that again and again and again. But what if there is a way for them?
Yeah.
They can secure that, they can get time, and then do that. But again, back to basics. You cannot skip the steps.
Yeah.
There is a way, there is a right way. That's all I'm trying to say.
So Krishna, I want to ask you one more question, if you don't mind. So let's say if I want to buy a house, okay? Okay, just an example, right?
Yeah.
Now, people, they tell me that when you buy a house, you need to have at least 6 months of mortgage as a savings account, just in case that if you lose your job or something. So do you think that with that example, you want to take the same example for your business, which is like
in business, that's not the way they're going to look at it. First of all, in business, let's say if you're a business and you have a business credit, business is more about cash flows. Business is more about your projections. Business is more about any inventory, any intangible assets. Business is all about it, and it's your job. It's my job as an entrepreneur to be aware of those things and then build those things and have them ready. I cannot take my brand for granted. I cannot take my idea for granted. I cannot take my IP for granted. I cannot take none of these things for granted. But if I'm aware of those things and then I'm cognizant about these facts, I will work on those things and make them valuable. So when I'm going to talk to the right banker or an investor, he's valuing those things monetarily. There's a monetary value for those things.
Yes.
There's a monetary value for your lifetime value of your customers, but are you aware of it? Do you even know the lifetime value of your customer? Do you know the value of your customer in the first place? Can you put a dollar value? But once you are aware of that, then you strategically work on to build those customers, whether you go to bank or not, just to make sure your business becomes valuable. What happens if your business becomes valuable? Because it can be sold at a higher valuation, or you can bring equity partners. You could do a lot of creative stuff, but that's not the way typical business owner is looking while they're building their business. They're always about top line. They're always about receivables. They're always about whatever, working in the business, not really opening up their mind and looking at other possibilities. Your partnerships, what kind of channel partners you build, what kind of strategic partners you bring to the table, that has a value. You don't take it for granted. Maybe it's not generating revenue today, but it has value. You got to be thinking about this in the long run. Again, now let me complete that home example that you gave it to me. So if you don't have certain bank balance, or if you don't have certain collateral like I was talking about, even if it is for your business, they will underwrite. Okay, let's say you want to buy your office building. Let's take it that example, right? As a person, you want to buy a home. As a business owner, I want to buy my office building. The way the bank is going to look at is it cash flowing right now? Is the building is there anything that you can do to that building to put that into highest and best use? What is the LTV? What are the other things going on in the local economy? How predictable would that be if it is producing cash flow? What's the historic data? What's the vacancy rate? What's the internal rate of return? What's the cap rate? They're looking at those things. They're not looking at, okay, what is your FICO score, Girish? How long have you been in the job? Those questions, those are the last questions that will come up. Can I see your personal bank statement? No, that's not the way it works. So if you look at these parameters, if you as a business owners are looking at these parameters, you won't have surprises because you're doing your homework.
Yeah, because it makes total sense, because it looks like I've seen people crashed also with this example of yours, and they are not a happy people, I'll tell you that. So let me ask you this another question here. So a person who opens a business tax ID, and registering a business tax ID is what? I'm just giving an example. I don't know the exact amount. Let's say $200 per year to renew that tax ID. Okay. My bank balance is going to be more than that. Is that the right attitude, that your bank balance is going to be more than 200 to cover my?
No, it's not about the bank balance, Girish. Your intentions need to be right.
Yeah.
You don't start a business just for raising capital. You start a business to run a business.
That's right.
To legitimately build a business, run a business, the way business needs to be run. Which means when I'm talking about this A to Z steps, the steps are not some random steps. They will make sure that you have a legitimate website.
Yeah.
They will make sure you need to have a legitimate email ID, not the Gmail email ID.
That's right.
You will have a dedicated phone number for your business. You walk the talk.
Yeah.
You're verifiable. And if they Google your business, it looks like it should look real, and it is real. So there are these requirements that you will fulfill. Those requirements will force you to really go and do the real thing. And if you skip those steps, which rightfully so, you will be ineligible.
And are there steps anywhere on the website that we can look at, or
You can go to geniusbusinesscredit.com, which is our geniusbusinesscredit.com, and then look for Business Finance Suite.
Okay.
And then you should be able to see all the steps that one needs to go through step by step.
Yeah.
And how each one is built upon the other one, and then basically you're creating your history with the DNB again, done in Bradstreet, if you're familiar with that.
Yes.
That they will have your Paydex Score. And in business, your suppliers, your distributors, your stakeholders can actually look at your business credit. You may not be aware of it. It's a public information, unlike personal credit scores. So they're looking at those things before they do business with you. And we better be aware of that.
Sure.
Because if they're doing some serious business with you, they want to look at your history, right? Your history, payment history, your buying habits, your purchasing habits, your paying habits, all those things. So that right there will bring that discipline for you, and then you leverage those things, and then work on your marketing. Work on your customers, work on your product, work on everything that you want to work on. So thereby you don't need to compromise on your goals. So I want to make $1 million in the next 2 years. Okay, why not $8 million, right?
Sure.
Your mind can open up if you really have a proper idea. Right now, it won't open up because you don't have source. You don't know where to start. If you're not empowered by these things available in the marketplace. So I think.
Krishna, just give me a second. So guys, let me explain here what's happening here. A person who opens a business account or business tax ID, whatever, right? Don't think of the bank balance. Don't think of that, how much money you're going to get. Find out what your goal is. That's what the key is. That's what Krishna is saying. Try to find out the goal of why you want to go and start a business. If business is liable for you or not, because the bank and everyone else around you will say that, are you valuable or are you crap? Does that make sense? I hope that makes sense.
Yeah.
If you don't make sense, please comment or email me and let me know. That's fine. So Krishna, one last thing, if you don't mind, any tricks and the trending items that we need to know nowadays? Because I'm pretty sure
so Girish, again, let's switch our gears back to marketing, right? I think what I think is very important in this day and age is that every entrepreneur, startup founder need to be aware of the fact that he is also a brand.
That's right.
You are a brand. If you are not a brand, it's your job to create a brand. It's your job to create a message. It's your job to position yourself while you are doing all of these things for your company. So you need to have your own personal brand. You need to have your own message. You need to create that for your company. You need to be having that for yourself and work on them. Nobody is going to work on them. Your employees won't work on them. Don't think that it is going to happen overnight. One day, my company will be bought over by Silicon Valley, and then I become a big brand. You're not going to become anything. They may buy you, but you're not going to become anything. It's your job to create that, and that's very, very important. Numbers will come. We all chase numbers. We always talk about, where's my top line?
Sure.
Yeah, don't get there, but get to the right things first. Work on your brand, work on your messaging, work on your positioning. Same thing for your company, and the details will follow. And then work on understanding your ideal customer. Who is your ideal customer? Can you clearly define every detail of your customer? Once you define that, then you define your market. Then you define where these customers are, how you're going to address them, what your message is, and then your pricing will be around that. If you go in this methodical way, you will never go wrong. Guaranteed. You will never go wrong. You cannot skip any steps. Without doing these steps, I have this wonderful product. This is going to change this entire world. That's all fine. But your customers don't know who you are. Your prospects don't know that you even exist.
That's right.
And then you wonder, where is the problem?
Yeah.
Why is this market not understanding this game-changing technology? Why is this? Yeah, because they don't even know that you exist.
Yeah.
But whose job is that to make them aware?
Yeah.
It's my job.
That's right. That's right.
So I say attention is the currency of the future. Why? You need to get the attention of the right people, whether it is your prospects, whether it is any kind of stakeholders. So I think that's important, and I think the guys who are really crushing it, they get it, they're doing it. I think that is one piece of advice that I can offer from my personal experience, and it works.
No, absolutely. Thank you for your last words on the Back to Basics here, and it's great to have someone who knows the business part of it and the marketing part of it, and it's kind of a tips of the day-to-day life. And people, they don't understand, and sometimes they fail and they get bankrupt and they don't understand why they failed and how they failed. Thank you for your tips on that, Krishna, and thanks for coming here on Back to Basics.
Oh, anytime. Thank you, Girish.
Yeah, so if I have any questions, I will contact you. Thank you again, Krishna.
Absolutely. Yep.
Thank you. So guys, today we spoke with Krishna. We talked about the basics of the marketing. We talked about the basics of business. And you are the brand. I mean, there are companies out there that we know, that we talk every day. Apple equals to Steve Jobs, right? Tesla equals to Elon Musk. And I'm pretty sure there's many out there. But keep in mind that Steve Jobs is no more, but his brand is still there. So you need to be the brand of your own company, and that's what he's trying to say. So as usual, as always, there is a quote of the day, and the quote of the day for Back to Basics is, "I'm not ignoring you, I'm busy building my empire." What does that mean? That means that you're building your own mascot, your own brand of your company, and that's what Krishna is saying. So guys, as always, as usual, what do I say at the end of the episode? We all know that, I know that, Krishna doesn't know that, so we're gonna say that today. Everything in life goes back to basics, and that's what we did today, guys. Guys, take care, God bless, see you next week. Comment, good, bad, ugly, either way, it will make my show successful as much as I can, and I'll give you great content, great customers, great clients, great guests, great host, everything. So guys, take care, God bless, see you next week. Next week's episode on Back to Basics. You made up a good point. Definitely the culture is definitely changing in many different ways. We all know that. So let me ask you a question between an oldie like in my times versus the Gen Zs. Okay, back in my times, we used to get a job and then we work our butts off to do well and then get promoted and whatever in that same company for the longest time. Nowadays, Gen Zs, what they have done is, this is what I've noticed from my point of view. There's no one else's point of view, by the way. So my point of view is that they get a